U.S. Treasury yields plummet after weak July jobs report Fed Governor resignation. In a surprising turn of events, U.S. Treasury yields experienced a significant drop on Friday, following the release of a July jobs report that fell far short of expectations. This unexpected data coincided with President Donald Trump implementing a new set of tariffs, adding to the market's volatility. The decline in yields was further exacerbated by the announcement of Federal Reserve Governor Adriana Kugler's resignation. This resignation opens the door for Trump to nominate a new member to the central bank's committee responsible for setting interest rates, potentially influencing future monetary policy. Specifically, the yield on the 2-year Treasury note saw a sharp decrease of over 25 basis points, settling at 3.698%. This shift indicates that traders are reassessing the likelihood of a Federal Reserve rate cut during their upcoming meeting in September. Similarly, the yield on the 10-year Treasury note fell by 13 basis points to 4.236%, while the 30-year bond yield decreased by 4.8 basis points, reaching 4.837%. To clarify, 1 basis point is equivalent to 0.01%, and it's important to note that yields and prices move in opposite directions. Chris Rupke, the chief economist at FWD Bonds, remarked, "Bond prices surged in response to the crucial jobs report, as the possibility of a Fed rate cut in September has widened slightly. The labor market appears to be in worse condition than previously thought. While it is not collapsing, it is certainly struggling, which could lead to a shift in the overall economic landscape of the U.S." The initial drop in yields was triggered by the July nonfarm payrolls report, which revealed a mere increase of 73,000 jobs. Notably, the job figures for May and June were also revised downward, with June's new jobs adjusted to just 14,000 from an earlier estimate of 147,000. And May's figures revised down to 19,000 from 144,000. In a related development, President Trump announced the dismissal of Erica McIntyre, the commissioner at the U.S. Bureau of Labor Statistics, who is responsible for compiling these employment figures. This decision came shortly after the disappointing jobs report was released. Later that same day, the Federal Reserve confirmed Kugler's resignation, although no specific reasons were provided. With her exit, it is likely that Trump will appoint a successor who aligns with his preference for lower interest rates. The Federal Reserve had maintained the current rates during their meeting on Wednesday, but 2 of Trump's appointees expressed dissent, advocating for a rate cut. The benchmark federal funds overnight lending rate has remained steady at 4.25% to 4.50% since December of the previous year. In addition to the employment data, investors were also keeping a close eye on trade developments as Trump adjusted tariff rates ahead of a self-imposed deadline. He signed an executive order late Thursday, just hours before the deadline, which introduced new tariffs ranging from 10% to 41%, set to take effect on August 7th. In a phone interview with NBC News following the announcement, Trump indicated his willingness to engage in further trade negotiations, although he stated that it was too late for other countries to avoid the tariffs that are about to be implemented. That doesn't mean that someone won't come forward in 4 weeks to propose some sort of deal, he added, leaving the door open for future discussions.